Good morning, everybody. Welcome to this video on Wednesday, September 15th from Vancouver, BC. My name is Frank Candido, Investor Relations at Nuran Wireless. And today I've got in Vancouver with the same background, Francis Letourneau, CEO. Welcome, Francis.
Good morning. Good morning for us. Good afternoon for people in Eastern Canada.
And Jim Bailey, our CFO, also in Vancouver. Good morning, Jim.
Morning, Frank. Yes, good to be back in Canada. Enjoying Vancouver.
Oh, yeah. Welcome back to Canada, actually.
Exactly.
We were just returning from Toronto, where we spent 2 very busy days, and looking forward to 2 busy days in Vancouver as well on this non-deal roadshow that we're on during COVID times. So listen, why don't we get right into it? Because this is not going to be a very long video, but I think the reason that we're actually doing this video is pretty obvious. There seemed to have been some confusion, Jim, with the video that you and I had recorded just before coming to Toronto and Vancouver, in which you talked about this corporate structure being Nuran Wireless Inc., the Pubco, and then 2 sub-entities, private entities, one that was a debt-focused entity and one that was an equity-focused entity. And everyone seemed to see this 51% number, thinking we were going to give away half the show in some sort of equity financing that we had planned. So why don't we just explain to our shareholders what we were trying to illustrate, and perhaps, you know, maybe we could have done that a little bit more effectively, but why don't you explain that to them?
Sure. Okay, Frank. Yeah, and that slide was meant to be illustrative of the structure that we're trying to put in place. But you know, as we've said, we have an objective of having 10,000 sites under contract and building 10,000 sites. Now that will happen over time, over maybe 3 to 5 years. And a 10,000 site company, we think, will be 250 million Canadian of revenue every year, recurring. Okay. Now, in order to build those 10,000 sites is going to cost money. And we think the total debt requirement for the build out is about 150 million Canadian. And now we can't just bring in debt on its own. And therefore, in order to support that, as we've been saying now, over time, we're going to have to bring in equity. And our view was that rather than bringing equity at the parent company, at the public company level, we would bring equity at the African subsidiary. And in fact, we have some investors that wouldn't invest at the public company. And so we would bring them in at the subsidiary. Now we have much more flexibility to raise money and pricing at the subsidiary level. And we can also do it at a higher valuation. We think a much higher valuation than what the public company would be valued at. And so any equity we raise is actually, one, it's non-dilutive at the parent level, but also it's at a better pricing than what we would do bringing it in at the top co. On the 51%, the only point there we were trying to make is equity could come in at that company level. We don't plan to bring it in on the Nuran Capital side, but we would never give up more than 51% or 49%. Sorry, so that we would retain 51% and always have control. And all of this is going to happen over time. The plan is not to go out with 49% just now. It's to offer whatever we have to bring equity to go alongside that debt over the next 3 to 5 years.
If I may bring something additional, Frank, in the discussion we have with development banks already, they all bring the point that we will need to raise equity at the sub-level. And that becomes extremely important, that we get this leverage. And at the sub-level, we get the much higher valuation. That's what Jim was referring to. Really important to note, to state that.
Right. Yeah. So in other words, then, you know, this is a crucial period we're in right now. Where we're about to deploy our first NAS units. So very exciting time, which I know that our shareholders are waiting on. And so therefore, what you're suggesting is that as a pubco in Canada on the CSE, we're basically, our market cap is what it is. So if we wanted to raise capital at this level, we're really at the mercy of whatever the market cap is. Therefore, the reason why we're even doing what we're doing to be on the road to try to get that market cap as high as possible. But on the private level, where there is no market cap per se to speak of, you can drive the valuation. At least you believe you can drive the valuation. I agree that you can, in terms of doing back of the envelope calculations on the 2,200 sites you already have under contract. And just to be clear, Jim, when you say 3 to 5 years on those 10,000 sites, you're talking about the deployment of the 10,000 sites. I'm sure that you're thinking that we're going to have those 10,000 sites under contract in much less time than 3 to 5 years from now. Is that correct?
Yes, yes. And I think we've mentioned it in the past that we're in discussion now with potentially contracts of up to 10,000 sites. So yes, we'll have that contracted. The point is that the build program will take 3 to 5 years. And the other important thing about that, and I'm glad you mentioned that, Frank, is once we get more sites on air and online, we start generating internal cash. So 10,000 sites, we've said that 2,000 sites will cost us about 50 million. Okay, 10,000 is not going to be 5 times that, or it's not going to be 250 million. We think it's about 150 because we start to generate cash to self-finance. Okay, but in order to get that 150, we do have to bring equity in, and it's exactly as you said. We're at the mercy of the public markets. We think that the shares are undervalued. We think they're there's a multiple of growth. But at a private level, on a private discussion with those types of investors, we can drive it off a discounted cash flow and those types of valuation, EBITDA multiples, and show them the potential. And we won't do deals at the sub level that are going to be diluted. It doesn't make any sense. They're going to be highly beneficial to the public company shareholders. And hopefully in the process of all of that, we'll bring the public company share price up, because people will, everybody will be on the same page in terms of seeing what the valuation is. But we have much more flexibility, as I've said, at that private subsidiary level to drive valuation.
Well, and this segues into the second reason for this video. It's going to be a short video, and I think we've clarified this now completely. Hopefully there's no ambiguity in terms of what we've said here. So the second thing that we want to discuss then is where we're at, because shareholders are constantly asking where are we at with the deployment, and the deployment is a key factor in driving our valuation, because it basically takes us full circle and shows that not only are we able to book these contracts, but we're able to get those contracts fulfilled and start bringing in revenue. And an important component also is, what will be the subscription rate. I know that Francis, last year in a non-NAS contract in Ghana on 11 sites, that I think in the first 30 days, you had something like a subscriber of 51% subscribership within 30 days of that contract being deployed. And I know that you're basing all the modeling on Nuran on a 25% subscription rate over the time of the contract. So therefore, this next step of getting these sites live and then seeing what the subscription rate's going to be is really going to also drive that valuation, depending on how high that subscription rate is. And so, can you update the shareholders at all on what's happening in Cameroon as we speak, and also the plans for DRC? Are we still on track? Are we still, planning on delivering what we've been telling everybody?
So thank you, Frank, for bringing that up, because for us today, it's one of the most important things. So we need to get those sites live, and we stick to the plan. So we need to have, and we will have, 122 sites live in Cameroon and 60 in DRC by year end. The first batch in Cameroon is 48 sites, should be live and will be live before the end of October. The next batch, 74 sites, is going to be for the remaining period of the year, to be live between, I would say, December 15, because there's a network freeze with those operators all the time. So everything needs to be up by then. Interoperability testing has been done. Check. There's a few containers on the ground waiting to be cleared to get into country. So we are confident that we will get those 122 and the first batch live between the end of October. So the experienced team are working extremely hard on this to get there. And this is something that we rarely mention, Frank. The group that we have brought together all come from the telco side. Tigo, Gaël Campan, that used to be the CEO of Tigo, Badi Abdallah, that used to be their VP operation, and Charles Quadio, that was their CFO. And we brought in a lot more people like Daddy Lukoki, that used to be the rural deployment manager at Orange DRC. So we have experienced people that join the company that allow us to not believe, but to be extremely confident that we will deploy those sites profitably in Africa. We're on target to get those sites done before the end of October for the first batch of 48 and 74 to come. In terms of the DRC contract, 60 sites to be built before year end and 120 in first quarter, but we're on the verge of having 550 in the next 16 I don't know. I think it's more 12 months. But anyway, we'll keep everybody updated. This is a crucial thing. Those first 300 sites, Jim, if I recall correctly, they will be generating 600K per month, if I recall correctly. So that will change the scope of the company too, Frank. We're aiming towards turning the corner of becoming break even before year end, 2022 year end. So we're really well positioned, but the deployment is key for multiple reasons, bringing revenue, but also demonstrate that fact that you just said, that all assumptions we've taken that were assumptions provided by Orange are realistic, and we can stick to it, and the business plan work. And this is a key decision criteria for those development banks to jump in and be supportive of the program.
Okay, well, a couple of
Francis.
Sorry, go ahead, Jim.
On break even, we'll be EBITDA break even positive by next year, 2022. I don't think, not at the net income level, but we will be operating cash flow positive by next year.
Okay, perfecto. Thanks, Jim.
Well, what's important about that is not just the numbers are going to generate for next year. What's more important, in my opinion, is right now conceptually, if you do, a calculation based on your 2,200 sites already under contract, the numbers are amazing. And therefore, this is why you believe that how could we be trading at these levels with those type of numbers we're going to generate? What's important is the minute you start going live on those sites and they start generating the type of numbers you think they're going to generate and possibly more, then those calculations become much less conceptual and become a lot more real. And this is why this next step is really, in my opinion, one of the most crucial steps that the company can take. Second thing, Francis, just to be clear, when you say that you've got X amount by the end of October, I think you said 48 sites by the end of October, the full 122 sites by the end of the year. This does not happen all in one shot. It's not one switch goes on. So these get deployed, right? So it could be 1 a day, 2 a day, whatever it is. So Francis, will you update our shareholders, when the timing is right, in terms of sites being live and that they're starting to generate revenue, et cetera? You will keep our shareholders appraised of the situation, I assume?
Absolutely. And more than that, Frank, even Orange wants to have a full disclosure of the successful of those rollouts. The first site live will come with a large promotion vehicle behind this from Orange point of view. So we're working hand in hand to make it happen. So yes, we'll keep everybody updated there.
Perfect. Okay, now why don't we move on to the last point, and I guess I'll do some of the talking here if I haven't already done a lot of talking. We're on this non-deal roadshow. What's a non-deal roadshow? A non-deal roadshow means that we're not raising capital, we're out telling the story. We decided to go out on the road, and let me tell you, not too many companies are on the road right now. But we decided to go on the road because we have a lot of shareholders or people that we've talked to both in Toronto and Vancouver, as we do in Montreal, as we do in Quebec City, etc. But we wanted to go out and reach these people face to face, to put a face to the name, and to also, get this story out, because it's an exciting story and people should know about it. And the thing is that with such important information that we expect in this last stretch of the year between September and December, which could be the most important period in the history of the company, we think it's important that people know what's coming. And therefore, they need to understand that when we talk about this conceptual model of ours and how, and Jim, you said it, this predictable recurring revenue. I mean, predictable recurring revenue is golden in the marketplace. And so if, this next couple of months, we wanted to set the table and make sure people understand what we expect to achieve in these next few months. And as we achieve them, we think we're going to be able to drive that share price much higher, which ultimately keeps all our shareholders happy. So we're on the road, we're meeting people, we're telling them the story. Every person we talk to, hopefully will start to watch the story. And as we execute, we expect that will lead to much more interest in our company, and hence in the shares of our company. So we're back on Friday. Francis, Jim, you're actually heading to Calgary on your own, so you'll have some meetings in Calgary as well. So I encourage any of our Calgary shareholders that Jim will be there. If you want to meet with Jim face to face, please reach out. But otherwise, next week's a big week as well, with the team being in Quebec City. And that's it. So we wanted to just update people on those 3 key points, make this quick and simple. Thank you for the clarity, Jim. Thank you, Francis, for the clarity on your end. Thank you for explaining to everybody that you still plan on sticking to your targets. And we look forward to updating our shareholders as we go forward. Jim Bailey, CFO, Nuran Wireless; Francis Letourneau, CEO, Nuran Wireless; Frank Candido, Investor Relations. As usual, reach out to us. We read every single text message and email. Thank you for supporting us, and we look forward to some great days ahead.